What's up guys, welcome to this weekend market internal recap. Today we're going to check under the hood of the market to search for some extremes in the internals. That's how you want to trade the market. You want to find the extremes on the upside and downside. Alright, let's dive right in. Obviously a challenging week for the SPY. Pretty bad candle going through the weekly 20 mid-band Duncan. It does have room to the second standard deviation right here, which would be about in the ballpark of 337 in the 330s. All right, we are going to jump right in the internals. All right, so let's start with the breadths in the market. So as you can see, the short-term breadth is extremely oversold. This is ready to basically go back up. And as you can see right here, when we were oversold here, we ended up having a nice relief rally, which is what I'm also expecting on the short term. Medium term, we are also at an extreme, guys. As you can see, we are now at the 50 move-in breadth, okay, of the market. We are at an extreme, guys, okay, so be very careful. Okay, the October low, we were at an extreme. The low here in June, right before we had that beautiful summer rally, we were at the extreme on the medium term, and we are now again, guys, at an extreme. Okay, right now you're gonna see a lot of people pivoting, becoming bearish. This is not the time to be bearish anymore, guys. If you have a long-term horizon, right, I'm still bearish on the market, but I'm just saying medium picture, this is probably going to end up being a nice little buying zone for some nice short-term gains. Bigger picture, on the long term, we are not at an extreme, guys, not yet on the 200 moving day breadth. Okay, guys, we are not there yet whatsoever, but short and medium term, we are ready for a bounce, and I am expecting a short to medium term bounce. I'm not calling for the bottom of this bear market rally. I am just simply on a internal perspective calling for a little relief rally. So it's probably a terrible idea to enter in a short position, in my humble opinion. But bigger picture, you could argue that it might just be the beginning. We are not yet at the same extremes that we were, example, in October, in June, right? We still have some work to do to the downside. But short to medium picture, I'm seeing a small bounce, which will then probably end up being a very nice entry for a bigger picture short. All right, guys, so now let's take a look to the S&P 500% RSI. Okay, this, in my humble opinion, is 10 times superior to the normal RSI. Okay, if I'm not mistaken, it just calculates the percentage of how long does the RSI stay oversold or overbought. Okay, way more precise, as you can see. Okay, it's extremely precise, so we can see the extremes in the internal of the markets. And right now we are at an extreme again, guys. Okay, so this is, a lot of people are gonna start turning bearish. You're gonna see a lot of people short the market, or a lot of people calling for the big crash. Okay, but be careful, guys, we're already at an extreme to the downside. Okay, I'm expecting a reversion to the means. I am not expecting a big reversal to the mean, but I am expecting a nice little pop to the upside. All right, so now let's dive in the technical side of the market. So as we saw in the internals, we are now at an extreme. Okay, it's very simple. Trading is not complicated if you keep it simple. Okay, we're at an extreme in the internals. Now we're gonna match the internals in the market with technical analysis. Okay, the way I do TA, I don't do squiggly lines. I barely use EMAs. I don't really use that. I only use primarily standard deviation and probabilities and the expected move in the option chain. Okay, combined with the internals in the market when we're at an extreme to the upside. All right, so now that we've done the internals, we know that right now we are at an extreme to the downside. Okay, that's when I start looking to buy for a short-term position, guys. Okay, and right now, as you can see, the market we're at the second standard deviation okay, of the price action on the daily, guys. In the same time, we're also touching the second standard deviation of the 4 hour, guys, okay? This has an extremely high probability of bouncing back up. Okay, this is looking more and more ready to go down, but before we're gonna have a nice little pop. Okay, there's about a 95% probability that we bounce very soon on the short medium term. Okay, afterwards we'll see. We could bounce back to 409, which is the reversal to the means, right? And then all the bulls are gonna come back again, and we could make a triple top, guys. Literally, we could go right back here to the medium green line, which is basically the reversal of the mean of the standard deviations of the SPY on the daily. Very doable to go right back up to 409. All the bears are gonna all get squeezed. Everyone's gonna lose their mind. This bear market is extremely tricky, guys. Be very careful. This is not the time to be wasting your money on stupid trades. This is the time to learn, to study, and don't be stupid, guys. Okay, and yeah. So this is what I'm seeing on the short term in the internals. We're at an extreme in the second standard deviation of the daily and the 4 hour in the same time. The probabilities are basically saying that there's a higher probability that we now go up than down, guys. Okay, this is how I trade. I use standard deviation, probabilities, and the internals. I will do a separate videos about how I look at the probabilities in the option chain. Yep, in another video. So I'm gonna keep it simple. It's my first video. So alright, so now let's go back to the weekly chart, guys, where we started. Okay, and I'm gonna show you one thing that is kind of concerning to me. It's basically the big old Mac Daddy. Okay, the weekly Mac Daddy looks like it wants to cross to the downside, guys. Okay, if you look at since the beginning of this bear market, guys, every time you see here it faked everyone out. It almost crossed and then it faked everyone out, right? And then you had this big sell-off. Again, we crossed here. Big sell-off. Okay, guys, if this does cross, guys, okay, we could have a big sell-off, a big royal flush. And obviously, if that does happen, my thesis on the small and medium picture won't happen, okay? Standard deviation is an awesome tool. The computers use it, the institution use it, but you need to understand that nothing is perfect in the market. And the thing with standard deviation is that they work very, very well in a orderly sell-off, okay, on the smaller time frames, but not during a royal flush. Example, COVID, okay, forget it. When the computers start dumping, like in COVID, forget it, okay? It does not work. Then you go on bigger time frames like the weekly and the monthly, and then most of the time you'll see that those standard deviation do work very well, like here on the monthly. You see, this is where we bottomed, guys, okay? And this is also how I cut the top. I sold a little bit, I was a little bit off from the actual top, but when we start hitting the second, third standard deviation on the monthly, on the SPY, guys, that's the top for a while. And right now we are in this range, okay? So that's the power of standard deviation, but it's also not perfect, okay? We could completely flush down here, okay? And then the standard deviation is basically going to recalibrate. Yep, that's pretty much it. That's pretty much what I wanted to show, guys.